Ladies and gentlemen, the US stock market right now is full of very frightening news. That includes the falling US dollar, the increasing government deficit, and the increasing US debt. They are incredibly high. And we have got trade wars that are looming and so many bad news, right? Amidst all this, the stock market now is potentially going to break a new high. And this is now affirmed by Tom Lee. And let's take a look at what he says. And more importantly, is what's my opinion of this whole thing. Let's watch on, shall we? So to start off, Tom Lee has come out with this video and says that there are four reasons why an all-time high could be approaching. And all-time high is not very far away from what we are right now. All-time high for S&P 500 is about 6,100 or so. And right now we're not very far away. Yes, there are little turmoil here and there, volatility, but we're actually very near all-time high. And right now, are we in a path to an all-time high and potentially going to even more greater heights and things like that? And I think it's important for us to also take a look at all the risks that are happening. My usual disclaimer, not giving you financial advice. This is not financial advice, just for education and entertainment. Let's go on. So I think it's important for us to understand the S&P 500 and many globally diversified index resilience over a long period of time. But first and foremost, let's take a look at what are the issues right now that are frightening many people. Number one, those perpetual US bears are talking about, you know, the US dollar is going to be de-dollarized. It's going to come down. It's going to lose its status as the global currency. And there's a lot of people say the deficit is so high of the government of US that the debt is going to break new highs and collapse the whole US economy as a result of the global economy as well. US Treasury right now is on the verge of potentially collapsing, and the yields are going to shoot up to some record number. And also, we have got the tariff war that's going on. There are many tariff issues that are happening right now. The war is not over, and what's going to happen after the 90 days is over. So all this frightens a lot of people. I need to anchor everybody back to why I think that the US stock market and the global stock market is actually quite a resilient stock market. But let's take a look, shall we? So the S&P 500, which is just a representative index that I like to use, and the same could be spoken of MSCI World Index, Dimensional Fund, and the Nasdaq or whatsoever. Yes, historically averaged about 10 over percent from 1926 to 2023. Arguably, right now is closer to between 11 to 12%. It's a very big number. And just to let everybody have a view of crisis resilience of the S&P 500 or an equivalent index, let's take a look at all the way back to the 70s to 2022, and there are far more those that are familiar with. If you put $10,000 inside, you will go up to $2 million right now, and potentially even more. So in 1970s, the gold standard of the US dollar was collapsed. There's a very serious crisis. But they seems to recover from it and go to new high. And of course, there was the Middle East War, Yom Kippur War, and Nixon resigned, and there was a very big political crisis of US. Saigon, which is the Vietnam War, Saigon fell. Okay, and then we have got Soviet Union invade Afghanistan, fall of Berlin Wall, and many other things. Cold War. I'm trying to look at 9/11 was a big one. Okay, and we have also have US invaded Iraq, and that's a big issue as well. Global pandemic H1N1 was being declared. 2008 global financial crisis, those a big one as well. Then we have got Boston bombing and Boston Marathon bombing, and many wars and many crises. Of course, COVID was a big one. And of course, there was a great inflation and so on. So you look at all these crises collectively, what we are facing right now, I think it's very small. Okay, I think it's very small. So that's why, I didn't sell any of my US S&P 500, NASDAQ, Dimension Fund, MSCI World Index, nothing. Never sell any of these things. I just held it on, right? A big, huge position. Okay, I did have some, I would say, speculative relatively dangerous counter that I use algorithm to run. Those I pare it down because it's quite dangerous, and thank God I pare it down because if I don't pare it down today, it will be very difficult. But you just take a look at this. The S&P 500 and many globally diversified index are very resilient to crisis. And why is it so? It's not that the index is good. Inherently behind the crisis are companies. These companies, and most of them are very big, large, huge companies. Number one, they're global in nature. So stop saying the S&P 500 is a US centric index. They're global in nature. But more importantly, these companies have very good entrepreneurs and very good managers behind it. They know how to overcome some of these crises that comes. Okay, so in Chinese, 兵来将挡，水来土掩. It's like the even there is hostile troops coming in, we are good leaders. We can fight them. If there's going to be a flood, we'll use soil and bury them. So in a nutshell, we can trust that this globally diversified index, the companies that represent them can overcome all these crises. And the one that we are facing right now is no different in some sense than one of these many other issues. Just to give a bit of flavor, right now, the US economy, strangely, is growing quite strong. Okay, they have one quarter of weakness, and right now, potentially the next quarter will recover. Okay, unemployment is low. Yes, there is risk as well, and we'll talk about those risks later. But right now, as it stands, the economic strength does not look like it's going to be heading towards a collapse that many people thought it would. So stop listening to this bullshit that many of these U.S. market bears are talking about. So the other one is the U.S. spending trend, according to Tom Lee, is that it is still going reasonably strong. It's not a collapse yet, okay? And of course, this could change, but right now it seems okay. The inflation right now is actually moderating down, and it's not as high as it used to be. It was 9%, at a high of 2022, and I told everybody the inflation would come down. Today it's almost back to normal already. The tariff could have a one-time jump. That one-time jump is not considered inflation. That's not definition of inflation. Inflation means the price keep going up and up and up and up and up. One-time jump, unlikely. And the MAS have also issued a warning that inflation could go the other way around. There is weakness in prices. So I think there are some forces that managing it. The corporate's earnings so far coming out have beat expectation, especially in tech and healthcare. And the earnings per share of many of these companies seems to support a very strong valuation expansion, and that's good news. The investors' sentiment and liquidity, according to Tom Lee, is right now in a more optimistic view that a lot of the ETFs and 401k, which is our equivalent of SRS, are all flowing back to equities, and the retail and institutional investors seems to be very positive on the next part. So I just say that the more important thing is that everybody now know that Donald Trump is playing bluff. Okay, he's just playing bluff. He is not serious, in my opinion, of going through with most of the threats that he's saying. So nowadays, even though he caused chaos in the stock market, it only lasts for a day or two. So in that sense, the market has adjusted to this president's volatility as well. So a few days ago, Donald Trump's tax plan got approved. And this means that they're going to cut taxes, okay, significantly. And many of these companies that we invested in S&P 500, NASDAQ, and so on, they're going to enjoy this huge uplift in profits. And of course, this will uplift in their stock prices as well. That happened earlier in this first term. It's going to happen now. And this certainly has some risk on the budget side, but on the corporate earnings side, there's a huge upside for these companies. And they are not just going to cut corporate tax, but they're going to spend more money, in particular in military and border enforcement, to make sure that US become a stronger country with less of these illegal immigrants and so on. And this is going to boost GDP in the short term. Remember, I said before, GDP is C plus I plus G plus X minus M, of which the word G stands for government expenditure. If government expenditure goes up, okay, this will cause the GDP to go up as well. So it is something that potentially is an upside. And Donald Trump is very pro deregulation. He's removing a lot of these regulations, especially on environment and financial regulation. He's also very pro crypto, which are something I don't like. But basically remove a lot of this regulation, and this could spur a lot of innovation in this sector. And with innovation drives a lot of upside to the economy and to stock market as well. So now we are not blind to the fact that there are a lot of risks as well. Okay. And market correction of more than 10% occurs right now about every 2 years. I had hoped that it would be more, but I didn't. It's just boing, boing, and it's over. But all this volatility could still continue, and what could cause them, it could be varied. Right now, everybody is thinking that the trade war threat may come back again. It may. I'll do a separate video of them. My concern is this: that there could be a risk that Donald Trump now knows that everybody think he is playing bluff. So he has to demonstrate that he's not playing bluff. So he has to whack the market really hard one time to let the opponents know that he means serious, and that will send some shockwave into the market. I think we have reached there. I'll do a live stream tonight if I got time to show you that this threat is real. Okay, so watch on, hit subscribe, and don't miss my live stream. Now, the fiscal deficit is a serious issue by the US government. It's now at $34 trillion, and it could widen. And that huge amount of debt requires a very high borrowing cost to sustain. And that should be a concern. I think that it is not possible that a US government will default, okay? Because it's printed, they could easily print their problem away. So as long as the default risk is not there, this problem is potentially not as big as what a lot of the bears are talking about. So there is also a risk of escalation of US-China trade tension. They just have a ceasefire, but doesn't mean they're peace agreement. So the trade war may re-escalate and cause all this supply chain disruption to happen if the trade war negotiation didn't go as planned. Right now, with Europe is also happening, and we shall see what all this may go about. So this one is worth our attention. So re-escalation risk is there. Let's not be blind to it. Now, we have talked about this for the Treasury market, US bonds and bills. There is a very serious case of a rising yield is happening right now, and there is a potential fear that China and Japan may suddenly have a sell-off. In that kind of environment, yes, there will be a big turmoil in the financial market. Let's not be blind to it. I think the chance is low, but not no. Okay. But to sum up again, I use another chart just to show all the bad news that's happened since 1929. And look at the S&P 500, right, and other equivalent index. So the pink color represents bear markets where there was a decline of maybe more than 10 to 20% or so. You have got Smooth Hawley Act. Smooth Hawley Act, there was the first trade war in a big way, and the Great Depression. Then you have got World War II, your Pearl Harbor, North Korea invade South Korea, Suez Canal, Cuban Missile Crisis, Six-Day War in Israel, Yom Kippur War in Israel, Iraq invade Kuwait, and later a war of the United Nations against them. And of course, your 9/11, Russia invades Ukraine, Hamas attack Israel, and so on and so on and so on, right? Look at the S&P 500, just go up, up, up. Is there volatility in between? Yes, lots of volatility. So the best thing is don't see, don't hear, walk away, do your thing, come back when the market is recovered. So My conclusion is this: to those bears, there's a lot of them. You hear so much of them. The end is near, the end is near whatsoever, right? I've always been, I always been very, very optimistic about the long-term potential with a lot of volatility in between of the S&P 500 and the NASDAQ and other globally diversified index. Okay, never sell them, let them hold on. So the S&P 500, in my opinion, is poised for growth, supported by fundamentals and policy tailwinds. But risks such as debt correction and global uncertainty remains. My suggestion again and again is please be diversified. Okay, don't just hold S&P 500, don't just hold NASDAQ. You know, diversify to other globally diversified assets, hold some property, hold some bonds, hold some T-bills, for example. And there are many other things that you could diversify yourself and you will live quite happily. Oh, yes, don't forget your CPF, right? That's the most important financial safety net. Okay. So with this, let's stand by to watch my live stream. Always click like and more importantly, subscribe. I will walk through with everybody why I think that the short-term shock may happen, okay? And that could be an opportunity for us to plow in. So my premise is that Donald Trump now thinks that everybody is taking him not seriously. Okay, so he has to do something seriously. So let's just watch whether this happen. Follow my analysis tonight, and I'll see you. Okay, bye bye.